What if I told you a business can own millions of dollars worth of cars and still lose money? The car rental industry generates billions every year, with thousands of customers renting vehicles every single day. It looks like one of the easiest businesses to own, but behind every rental is a hidden cost that most people never see. Cars lose value every day. Repairs pile up. Insurance claims can destroy profits, and one bad investment can cost millions. So how do companies like Enterprise, Hertz, and Avis stay in business? And is owning a car rental company actually worth it? Let's break down the economics.
If you think owning a car rental business is as simple as buying a few cars and renting them out, think again. The global car rental industry generates well over $100 billion every year. In the United States alone, millions of travelers rent vehicles for vacations, business trips, insurance replacements, and temporary transportation. On any given day, hundreds of thousands of rental cars are on the road. It seems like the perfect business. Customers pay before they drive, the product comes back so you can rent it again, and unlike restaurants or retail stores, you don't need a constant stream of new inventory every day. One car can generate revenue hundreds of times throughout its life.
So why don't more people become millionaires by owning rental companies? Because the car you buy today starts losing money the moment you drive it off the dealership lot. Not next month, not next year, today. And that single fact changes the economics of the entire business. Before you even rent your first vehicle, you've already made one of the biggest financial decisions your company will ever face. The question isn't how much the car costs, it's how much it will be worth when you're finished with it.
Let's say you want to start small, not a nationwide company, not thousands of vehicles, just a local rental business. The first expense is obvious: the cars. A fleet of only 20 vehicles can easily cost between $600,000 and $900,000, depending on the models you choose. Luxury SUVs and premium vehicles push that number even higher. But buying the cars is only the beginning. You'll also need commercial insurance, business licenses, fleet management software, a secure parking facility, cleaning equipment, maintenance contracts, employee wages, marketing, and enough cash to survive months when demand slows down.
Many new owners underestimate one critical expense: idle cars. Every vehicle sitting in your parking lot without a customer is still costing you money. Loan payments continue, insurance continues, depreciation continues, but revenue stops. In this business, an empty parking space isn't just empty, it's expensive. And that's why successful rental companies obsess over one number more than almost anything else: fleet utilization. Because every day a car isn't rented, the biggest mistake first-time rental business owners make is believing that cars are assets. They're not. At least not in the way most people think. A rental car isn't like a house that might increase in value over time. It's more like a smartphone. The moment you buy it, it begins losing value, and it never stops. Take a brand new SUV worth $40,000. Within the first year, it could lose 15 to 25% of its value. After 3 to 5 years, it may be worth only half of what you originally paid. Now imagine that happening to an entire fleet of hundreds or even thousands of vehicles. Suddenly, depreciation isn't just an accounting term. It's your single largest business expense. And unlike fuel or repairs, there's no way to avoid it. Every mile driven, every month that passes, every newer model released pushes the value of your fleet even lower. That's why successful rental companies don't ask a simple question like, how much does this car cost? They ask something much more important. How much will this car be worth when we're ready to sell it? That one question determines whether a vehicle becomes a profitable investment or an expensive mistake.